Right, okay guys, let's get right into it then. Currently looking at oil. This is the 4 hour time frame and looking at technicals first. So oil made a low of last week at 93. We've seen a bounce back, and then Thursday we touched 100, and then on Friday we dipped back down again. Opened this week at 97.91, and since then we did break that last week's low and made a new low of 91.65. Since then we have sort of climbed back up and touched 97 and currently trading at 95.49 spot. Just a bit of a hint and tip, we could see that whatever the low is for the week, mark that out, that area, and if we do see a sort of a break or a retest on that area, could be a good time to sort of see what wholesalers are selling the fuel contracts at, and it is a good idea to buy some at that time. So now, if so moving forward for next week, if you do see oil come down to 91.65, I'd be very interested looking at what sort of rates the fuel contracts are sold at, because I know a couple of suppliers did buy at a good time, and now we sort of climb back up. So they are, so they'll be quite competitive for the for next week. So moving over to cable, sorry, so oil is down 3% for the week, but again, it's just down to what time, where, and what price you bought at. Moving over to cable, this is the daily chart, trading at 1885. We have broke that 120 area, that big psychological area, coming down to July's lows again. Inflation data came out for the UK economy on Wednesday, back in double figures. Sorry, it's made a new high of double figures of 10.1%. This signals for the Central Bank of England um, to go for bigger rate hikes, as inflation is running away and the rate hikes are not doing anything at the moment. So if they do come out with bigger rate hikes, maybe a 0.75% like the Federal Reserve, this could signal that the momentum in the pound could come back in, and pound buyers could come back into it, and we could see cable pushing back up 120 and could rally back up to 125. Again, is all down to what the central bank signals and how the central bank reacts. But normally, a rule of thumb is inflation is getting out of control. The central bank do come more aggressive and sort of raise interest rates at a more aggressive pace to sort of curb inflation. And when interest rates are rising in a currency, that does attract investors to sort of buy that currency for the rate differential. So yeah, the pound is down 2.5%, currently trading at 1885. And we also if we switch to the line chart, we are making a pattern of a inverted head and shoulder. So that's the left shoulder, this is the head and the right shoulder. In technical terms, this an inverted head and shoulder is a bullish pattern. So that basically means is that pound against the dollar is looking to reverse, and we could see it pushing up in the next couple of weeks. So that's it from me then. Join me again next week.